Hi there, my name is Dean Phillips. I'm Managing Director with Philanthropy and Wealth Advisors down in South Florida. I appreciate you taking a few moments to watch my video today. I have some important information for families that hold a charitable remainder trust, or perhaps you're an advisor that serves families who have charitable remainder trust, an attorney, a CPA, or a wealth advisor. There is a liquidity option for families who have charitable remainder trusts and not only allow them to tap into the capital that's latent in their trust, but also get very favorable tax treatment in the sale of a charitable remainder trust. Now, it's unlikely that you've even heard that there's a marketplace for charitable remainder trusts, but it actually is an evolving market that's taken place over the last 12 years. Wealthy individuals have determined, some wealthy families have determined it's a very attractive way to fund their charitable commitments. And what it's allowing for somebody who has a charitable remainder trust to do is to potentially monetize all of the future income they're expecting to take off their trust, and in many cases even receive a premium, net of fees and taxes, over keeping the trust, and then also get tax advantaged treatment on that lump sum of cash. So this is the way it works. A charitable remainder trust was often a vehicle that someone used who had highly appreciated assets. They moved the assets into the trust. They were able to do that without any capital gains tax that was created. And then they set the trust up for a period or a lifetime income stream. Upon the death of the last income beneficiary in a traditional charitable remainder trust, the remainder, or remainderment, if you will, goes to a charity that was named at the inception of the trust. Now, the reason that people did this, again, because tax rates were higher, they had low cost basis assets, and they got an immediate tax deduction. Nothing happens with the tax deduction that they originally received. There's no clawback. And there's some reasons for that I'll be happy to explain offline. But ultimately, what you have is if you have a charitable remainder trust, you have assets that are being paid out over many, many years, in many cases 10, 15, 20 years or longer. And there's some challenges with those kind of future income streams, isn't there? Number one, we don't know where tax rates are going to be going forward. And I think there's a general feeling among many wealthy individuals that tax rates are likely to go higher on the wealthiest individuals going forward. So those tax rates. The second thing we don't know about is we don't know how long we're going to live. We have longevity risk. If you live to full life expectancy, that's terrific. We hope we all have a long, healthy life, but there's no guarantee that that's going to take place. And then the third reason that we might want to consider a sale today, take the money and run, if you will, right, is that we don't know where inflation is going to be. So what this means is that if you have a charitable remainder trust, and there's about 125,000 CRTs out there that file a tax return every year, you may be in a situation where you benefit from considering whether liquidity now makes more sense than keeping the trust and waiting on that income. There's a few things that I see on a regular basis from those that have interest in the sale of the charitable remainder trust. Number one, there's just a higher, better use for the capital. It could be that you set the trust up 20 years ago. We've gone through several recessions. The market has been volatile, and the capital would come in handy. Scenarios where people wanted to make acquisitions for their real estate portfolio. They wanted to add to their commercial real estate portfolio, but the banks weren't lending. So maybe that cash could go to work in additional investments. It may also be possible that you have a charity you'd like to benefit now, not in the future, and the cash can come in handy in making a small gift in addition to the personal reasons you might want to have access to some of that capital as well. So many different scenarios. Also, over 20 years or longer in many cases that these trusts have been set up for individuals, there might have been a change in marital status. I had someone recently that came to me and said, I have a divorced client and she wants to know if there's a way she can tap into the liquidity from the CRT that she got in a divorce settlement with her husband. Now, how can these trusts be evaluated? How do we go about coming in with an appraisal? I just need some general information on the trust. And in fact, I don't need any identification information on the client. So if you have a copy of the trust document, I just need some general information initially to come back with an appraisal from multiple buyers that might potentially want to buy the trust, again, to fund their charitable commitments. we want to work with your financial advisor. If you're an individual, this is not something that we do on our own. We want to work in concert with your wealth and tax team and your legal team. And I can show you many, many testimonials of people that have been extremely satisfied with how the process has gone. I'm a law firm in the Southeast that drafts the documents. There's a large bank, a well-known U.S. bank that oversees the escrow. So it's a that I think many people would benefit from exploring. If you have a CRT, or if you have clients with CRTs, or maybe you just have a network of attorneys and CPAs in your community that you'd like to talk to about this idea, please contact me. Again, it's Dean Phillips with Philanthropy and Wealth Advisors. My number is 561-573-4828 for